The one constant that I would remind everybody to think about in why the use case for investing in this sector, and I personally believe over the next decade, crypto will be the 12th sector of the S&P. And the reason I believe that is when I teach graduating cohorts of engineers, I don't care what college you do it at. You can go to MIT, Harvard, you can go to Waterloo in Canada, or Temple, Notre Dame, you name it. A third of the graduating class, the smartest hands above keyboards in the world, because some of these classes are 130 international, particularly MIT. They have no interest in, as engineers, to go back to the other 11 sectors of the economy. Zero interest in working there. They all want to work on the blockchain. So my argument is you can't take that much intellectual capital, the best and the brightest, put them onto this sector by the tens of thousands every week and not expect incredible outcomes.
Hello and welcome to Wealthy Value. In today's video, Canadian businessman, author, and TV personality Kevin O'Leary updates about his outlook on inflation, upcoming Ethereum merge, and the future of blockchain and cryptocurrencies. Kevin also explains his reasoning behind why some catastrophic failures like Luna collapse are good for the crypto industry, and how crypto will be the 12th sector of the S&P 500 in the coming decade. Make sure to stick around till the end of this video, where Kevin O'Leary makes a bold prediction for Bitcoin and other cryptocurrencies. If you liked the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
I'm in the camp that likes to have hedge funds short. That's particularly if that's the consensus, that's extremely bullish for markets. Obviously, have to cover. If you look at hedge funds as an index, they're wrong 50% of the time, and you'd expect that. Different strategies, obviously, but the added bonus about hedge funds and why they can add a lot of volatility, and sometimes to the upside, is many of them use 3 to 7 times leverage. So when they're wrong, they're really wrong. And obviously that's even been exacerbated in the crypto market, where we've seen lots of leverage blow up all kinds of different business models, which I consider very healthy. So the reason that it's been difficult to really call the bottom in the market or time the market, if you weren't participating in it during the 5 weeks of trading in July and August, you've missed all the gains this year. And they were unanticipated gains when the market decided that the economy was much stronger than people gave it credit for, and that consumers, still awash in $6 trillion worth of free printed cash, are still spending. So where we go next is a huge debate. It's whether it's 50 basis points or 75, it's one of the above. And then probably one more hike after that, and then we'll have to see what the Fed does. But all of this is baked into the market, and earnings in the last quarter have been much better than anticipated. So everybody's been confounded by the economy, by the market, and even crypto. Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years we will get regulation, and then finally we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and Ethereum and even USDC, probably the 3 most popular right now. And so if we do get regulation first, it'll probably happen in stable coins, because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then of course it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent. It's tiny, but it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class, because its price will materially appreciate. That's my investment thesis. Well, I was just going to say, from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem, and it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company, and you have to sacrifice some shareholders, but it's for the greater good of this nascent industry. And so everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back, and nobody will capitalize them. And that's great. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situations. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news. First of all, the merge has been forecasted to occur for 4 years in a row now. So for all the excitement, I'll believe it when I see it. There's a lot of people that are dissuaded from doing this in the Ethereum mining business. So they're not that excited about it. So you've got, an inconsistent harmony occurring. And now anything could happen. But really at the end of the day, ETH it's slow and it's expensive. And so if it doesn't fix itself, it's going to have lots and lots of competition. And so everybody has an opinion on this. And I think the market is being the market. I have a pretty big ETH position as well. I'm going to wait and see what happens, because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen. And so I also think that there's other applications from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen, and how financial services work, and the cost, the speed, the fees, the transparency, auditability, security, all of these things. And I tell people, look, if you want exposure, have at least 7 or 8 positions on these projects, because you just don't know. You can do it by order of market capitalization. That's easy to find out. But that doesn't mean you're right at doing that either. So diversification on this very nascent system, and whether where it all fits, and when people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. It's the adoption by users of apps and applications on top of it, and payment systems and transparency and all the rest I mentioned, that will eventually determine whether that platform is profitable or it isn't. At the end of the day, if it never makes any money, it's going to zero like every other business, and many will go to zero, and that too is okay. I think there'll always be, opportunistic token creation and trying to define it, whether you're playing a game or whether you're using it to buy something in the metaverse. There's so many different use cases being tabled, but in the end, when you look at most markets, what you find is it's the adoption of standardization that creates value. So if all of a sudden there's 10 stable coins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths, they'll be very large, and they may have slightly different attributes. But, there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. The last place you want development work done is with the government. They're the worst at it. So I'd let the private sector figure that out, and just the government provide regulation. But, everybody's speculating on this stuff.
So what are your thoughts about Kevin's comments on Ethereum merge? Will it be successful or not? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.